Hello, good day to all. This is Kelvin here. Welcome to this week's latest weekly edition of Weekly Technical Outlook on the major stock indices. So before we start, let's have a quick recap what happened last week. As we know that last week we have a kind of a very bearish start for the year, which is 2021, where the SPX 500 has recorded its worst first day decline for a year since 2016. But most interestingly over here is that it ended last week on the positive footing. All the major stock indices, the S&P 500, the Nasdaq 100, the Russell 2000, as well as the Dow Jones Industrial, all posted fresh record high and ended the week on a positive close. All right. So, and also what interesting over here is that the Asia stock indices, the majors, the Hang Seng, which index, which is the Hong Kong 50, as we call it in CMC platform, the Nikkei 225, which is the Japan 225, all of them actually follow suit as well, especially on the Hong Kong 50, which I will touch on later on. It actually broke out a very key technical configuration. All right, so without further ado, let us take a look at the disclaimer slides first. All right, so let me take you to our CMC markets platform. So first and foremost, I will always share this Ishares Philadelphia Semiconductor ETF. So why is this ETF so important? Because it represents global growth as seen on the semiconductor industry. So as we know that semiconductor industry is very crucial to the world economy right now, especially from the space of 5G to manufacturing as well as robotics. It actually requires semiconductor. So any signs of exhaustion on this particular ETF, we will start to see it's a kind of leading indicator to tell us that number one, there will be a potential risk of coming into the marketplace, and also this risk off will tend to lead to a medium term correction on the major stock indices. So let's take a look at the latest technical element on this semiconductor ETF. So as we highlighted last week, we expected the close to about 3 weeks of consolidation is rather as a bullish pennant to actually resume its medium term rally to actually target this 39590 slash 40580 resistance level. Yes, indeed it hit on last Friday. So where do we see right now? Okay, so based on current price action, there is no clear signs of bearish reversal yet. So what we are actually seeing right here now in terms of probability, the medium term uptrend that is taking shape since 28th of October lows remains intact. Potentially what we could see is a minor pullback in a couple of 1 to 3 days to actually retest the resistance of this bullish pennant now turns into a pullback support at 379.95 slash 383 figure level with the key medium term support at 363.55. Why there is a potential minor pullback, we could see that the RSI now has already reached a overbought level, coming very close to an extreme overbought at the 77 level. So therefore, giving a increased probability of a minor pullback, but not a medium-term bearish reversal to actually alter this medium-term uptrend that is still intact since 29 October 2020. So with this key medium-term support 363.55 holds, we do expect potentially another upleg of this semiconductor ETF to target 42190. Above 42190, we should see 442.70. So all in all, the medium term technical configuration remains positive on this semiconductor ETF, which means medium term risk on behavior remains intact and is still favorable for the stock indices from a multi-week perspective. No, now let us move on to the SPX 500. So let's begin with the daily chart first. Okay, so on the daily chart over here, ever since the bullish breakout in the early December, 1st December last year, from this major expanding wedge resistance that was in place since the high of September 2018, now kind of turns into a pullback support at this 3700 figure 3700 figure level, 3740 figure level. So what we are expecting right here is that last week it actually hit the first target or the first resistance at 3770. Ultimately, our next target will be at 3960. The RSI still showing higher high, holding above this support at this close to 55 level. No signs of a bearish divergence as seen on the the daily RSI indicator hasn't reached a kind of an extreme overbought level yet. So what we are expecting over here is that from a medium term perspective, the bullish trend or the impulsive up move remains intact on the S&P. So now, or on the SPX 500, pardon me. So now what's the strategy for this week? No change on the strategy in terms of the target that we have. 3880, the resistance, maximum 3960 slash 3990. So what we can do is that we actually tighten the key medium term support this week, the pivotal support, to 3722 to remain a bullish bias for the SPX 500. Now moving on to the higher beta Nasdaq 100. Okay, so as we could see, the Nasdaq 100 remains on a uptrend, higher high, higher low since the bullish breakout on 23rd of November from this symmetrical triangle formation that was in shape on this in place since 2nd of September 2020. So as similar on the S&P or the SPX 500, first target has already been made last week. 12,970, 13,180, still looking to play up towards 13,875, potentially the next resistance level. RSI still remains positive above the support at 50 level. Now moving on to the strategy chart for this week. Similar on the SPX 500, what we do over here is that we tighten the key medium term pivotal support to 12,640. So as long as 12,640 holds, which is correspond to also the 34-hour moving average, which is sloping outwards. And what's so interesting about this 34-hour moving average is actually supports the previous dip that was seen on the 6th of Jan and as well as 10th of November, and as well as supporting previous dip on the previous medium-term impulsive up move that has taken shape since 23rd of March 2020 over here. So as long as this 12,640 holds, we do expect potentially on the Nasdaq 100 to actually print higher new fresh records to target 13,350, followed by 13,825 slash 875. However, if you have a daily close below 12,640, this direct push up will be invalidated to see a deeper pullback to actually test the next support at 12,100, which is the former swing high of 12th of October 2020 as well as 9th of November 2020. Now moving on to the Asia major stock indices. So as I mentioned earlier on my presentation, is why Hong Kong 50 is very important, because right now, in fact, Hong Kong 50 is one of the laggards in the last 2 years plus or so, but if this laggard now could be potentially turned into a outperformer this year in terms of percentage. Why? Because it actually managed to stage a bullish breakout from a very long-term circular descending trend line. Why this trend line is so important? Because this trend line has kept previous rebound in April 2019, in January 2020, and since this is a descending trendline resistance that was in shape or in place since its all-time high that was recorded in January 2018. So what we could see out here in terms of price action, potentially in terms of percentage, it could be one of the outperformer this year. All right, so right now this long-term circular descending trendline resistance now turns into a pullback support at 26,875. So the strategy for this week on the 4-hour chart, what we do is that we tighten the key medium-term pivotal support to 26,875, which was confluence with the, in a shorter term, the former swing high of 9th of November to 4th of December 2020, as well as the pullback support of that former long-term descending trendline resistance. So potentially we could see further upside towards 28,500, followed by 28,770 slash 29,990, which is the upper boundary of this medium-term ascending channel that is in place since 25th of September 2020, as well as a Fibo expansion level, which is the 76.4 0.76 per 0.4 level. For our RSI remains bullish, just actually bounce off from this pullback support at 50 level, hasn't reached the extreme overbought level yet, which is telling us that, implies to us that short to medium term upside momentum has not reached a overstretched level. All right, so now going on to the next major stock indices, which is the Japan 225 over here. Okay, so let me recap the longer term chart first. So on the longer term chart, we have this bullish breakout on the November, in the mid-November. Since 2 years ago, there's this range resistance since Jan 2018. So it has a bullish breakout in the early part of or to mid October last year. So right now what we are just seeing is we are starting now to see a start of a major impulsive up move that could actually take it up much higher in first step towards 29,440, a break above it to take us towards 35,520 slash 34,050. So that's more of a longer term perspective. How long is this longer term perspective? We're talking about 1 to 3 months. So how about the strategy for this week? So definitely the strategy for this week, we got to take a look at the shorter term chart, which is the 4-hour chart. So what we have on the 4-hour chart over here is last week it has a strong rally, okay, from the low of 29,900 level, pardon me, 26,900 level. So this level, interestingly, it actually confluence with the former medium term range resistance from 30th of November to 19th of December, broke out last week, retested from it, and staged a strong rally towards the end of last week. So coming very close to our first target at 28,410. Okay, let me share. Okay, it actually printed. Okay, last Friday, US session close at 28,375. Give or take, very close towards the 38,410. So what we are expecting now is, given that the RSI, the 4 RSI, has started to retreat down from the overbought region. So potentially what we could see over here is indicating to us that in the very short term, the upside momentum seems to be a bit overstretched. So we could actually see a pullback towards this minor support over here, which is the former swing high area of 29,000 to 29 December 2020, which is at now turns into a kind of pullback support at 27,700. As long as this key medium-term pivotal support, which should be tightened this week to 26,935 holds, we do expect another round of potential impulsive upleg to target the next resistance at 29,440, which is also the kind of a medium-term ascending channel upper boundary that is in place since 30th October 2020 low. So however, if we start to see a break below or a daily close below 26,935, this direct impulsive up move would be invalidated to see the start of a corrective decline towards 26,215, maximum 25,400, which is the former swing low of 19th of November 2020, as well as this major ascending channel support that is in place since 16th of March 2020 low. All right, so now moving on to the German 30 index. So for the German 30 index, as we could see over here, is that last week it actually staged a bullish breakout from this former descending resistance that was in place since 20th of Feb 2020. Did a new fresh all-time high last week over here. So we could see on the monthly chart All right, it actually shaped a new fresh all-time high. So in a monthly chart, we could see the long-term bullish dynamics remains intact since the low of March 2009, still trading in this or evolving in this long-term circular ascending channel. Okay, next resistance longer term we're at 15,020 level, followed by 16,685 level. Monthly RSI's bullish breakout from this former descending resistance, still have way room to go to move upwards before going up towards the overbought region. All right, so now going on to the shorter time frame for the strategy for this week, which is the 4-hour chart. So similar to the rest of the major stock indices, what we did over here is that we actually tightened the key medium term pivotal support level to 13,430 for this week, which is also the former swing high of 30th November 2020, as well as the medium term ascending channel support that is in place since 30th October 2020 low. Looking for further potential up leg to test 14,315, followed by 14,620 slash 730 level. All right, so as long as this 13,430 holds, we still maintain this bullish bias on the German 30 index. So however, if we start to see a break below 13,430, this we call it bullish bias will be invalidated to see a corrective decline to retest the swing low area of this 11 December, and as well as for 17th of November 2020, which is actually now supported at 13,050 level. So overall, in a nutshell, we still maintain a bullish bias for this week on the major stock indices. So do have a great trading week ahead, and I see you all next in my next video.